But in the meantime, you did have Essar Oil. We flagged that one off. It did put out a fairly decent set of numbers. GRMs did manage to surprise. We've got the CFO of the company, Suresh Jain, who joins in to give us more perspective on the Q3 numbers. Mr. Jain, thanks very much for taking time out to join in. Now, if we take a look at the kind of GRMs that you clocked in on a year-on-year basis, they are lower at $7.93 per barrel, but it is much higher than what the street was factoring in. Can you just take us through what is the outlook for GRMs going forward?
Yeah, thank you. Our gross refining margin for the current quarter is 7.93, which is about $9.33 higher compared to the IEA benchmark. The reason why our gross refining margin is lower mainly due to a negative IEA margin of $1.40.
Now, Mr. Jain, apart from that, your interest costs were rather high this quarter. How do you plan to lower that?
Yeah, if you see, there is a marginal increase in the interest cost this quarter, which is mainly due to high forward cost which we have incurred during the last quarter. But if you see the corresponding last quarter, there is a reduction of 8% in the interest cost. Yet for the first 9 months and comparison with the last 9 months, on a net basis, there is again a reduction of 10%. We have seen the reduction mainly on account of the dollarization program. Till date, we have done close to $900 million equivalent of rupee loan into dollar. We have a target to complete our dollarization program, which is $2.27 billion approval we have right now from Reserve Bank of India.
How is the throughput this quarter and how your enhanced capacity is helping your utilizations?
Yeah, I'm happy to share with you that this quarter we have achieved the highest daily run rate of 57,000 tons per day. We have achieved a throughput of 4.86 million metric ton in 85 days. Overall, our throughput for the first 9 months is a capacity utilization of 103%, which is well above the average industrial capacity utilization. Now, in terms of complexity, as you know, we have 11.8 complexity. The premium over IEA benchmark is 9.33, which clearly speaks that we have been able to leverage our high complexity. In fact, this quarter we have processed 98% of heavy and ultra heavy crude and achieved lowest ever API of 25. Now, having said that, we have produced around 84% of light and middle distillates despite processing 98% of the crude, which clearly reflects that refinery is fully leveraging its complexity and capacity.
All right, Mr. Jain, we'll leave it at that. Thanks so much for joining in with a perspective on your numbers. All the best for the coming quarters. On that note, we wrap it up on Business Day. Thanks for watching. Markets tomorrow up next.